All right, good morning. Good morning to everyone. Thank you so much for joining our session today, our webinar with Cascadia Capital on key trends and predictions for robotics, automation, and AI. We're privileged to have Jason join us to share his insights about this topic. Before we go in, just a few quick logistics items. We do ask that if you are not speaking, right, please put yourself on mute. So we can minimize any potential like disruptive noises and so forth, and we all have a great listening experience together. So please, if you're not speaking, please put yourself on mute. If you are speaking and you want to ask questions to Jason, feel free to jump in at any time. If you have, there's a particular point that you want clarification, etc., feel free to just speak up. Please don't be shy. That's the best way to keep things interactive, and it's more interesting than just kind of sitting back and listening to a long talk. All right. So please feel free. If you rather not speak up, you'd rather use the chat window, that will work as well. You can also use the chat to submit any questions that you may have. Right, so just a few quick intros about the Alliance of Angels. So my name is Jane, and I run this organization. There's 140 angel investors in my group. Every year we put about 10 million into 20 companies. Most companies that are fundraising from us, they're looking for a total of between $500,000 and 1.5. And my typical check size is 250 to 500. Right? We are a sector agnostic investor, also stage agnostic. The hard filter is that we only invest in companies headquartered in the Pacific Northwest. And folks may ask, especially given the current public health situation, are we still investing? The truth is that the investment climate is as healthy and as vigorous as ever. And yes, we are absolutely putting money to work. If you are fundraising, you're interested in learning more about us, feel free to send me an email. My email is on this slide. And if you are maybe an angel investor, you're interested in learning more about joining my organization, also feel free to send me a note. I'm happy to have a chat. The A of A has been around for more than 20 years. And if we go way back, one of the founders of the organization is a gentleman by the name of Tom Cable, right? And Tom Cable's son, Kevin Cable, is on the executive team of Cascadia Capital, one of our speakers for today. And so we're very privileged to have them join us and tell us a bit more about this topic. So I'd like to, right this time, hand it over to Jason from Cascadia Capital, to introduce a little bit more about himself and his firm. Jason, please take it away.
Yeah, thank you. And thank you for everyone's time today. I know Cascadia Capital, through Kevin, has done some prior sessions for Alliance of Angels, and I'm excited to speak with you all today on our robotics, automation, and artificial intelligence practice. So what I'm going to do is share my screen, and some of you may have seen the report that we put out in February on this sector. I've also linked that in the chat function, so you can pull it up as well. And rather than just walk through the report, I want to include some anecdotes that we've seen in the market and some pieces of potential advice that we would recommend as companies are growing their investor base and growing their operations, because I think that'll be particularly helpful for many people on the call. So first, let me share my screen here. Perfect. Does everybody see the lead-in page to the presentation? Correct?
Yes. Yep, it's looking great.
Perfect. Perfect. So just by way of introduction, my name is Jason Lippenberger. I am a vice president at Cascadia Capital. I have been at Cascadia for about 4 years now, and am on the robotics, automation, artificial intelligence team. My background originally was in semiconductor and software investment banking. Started at Bear Stearns in San Francisco, before moving into a growth equity role myself for a firm called Summit Partners down in Silicon Valley. And for the last 10 years, I've focused on middle market and emerging growth opportunities within the Pacific Northwest. That's both on some of Cascadia's merchant banking activities, as well as the focus on robotics, automation, and artificial intelligence. This is a team that came together over the last couple of years. We had an official announcement last October, bringing together some of my colleagues active in industrials, active in energy storage, active in automation, and robotics and autonomy under one umbrella. So start out in saying, what's happening now? A number of different industry dynamics are at play here. Many of them are a long time coming. I think the current COVID situation has accelerated some of the dynamics, as well as the general advancements in technology and business models. It's an exciting place to be. I think a lot of groups, companies, investors are recognizing the benefits of some of these newer robotics, automation, artificial intelligence technologies that can really enhance job situations with humans and be at an affordable cost, which would allow humans to continue to work in many of these roles, but focus on their highest and best opportunities. And so when we take an approach in covering companies in this sector, we look for ones that have real world opportunities right now that can make companies operate more efficiently if it's a product line, and that there is an adoption ramp that is reasonable and makes sense. And one of the overarching themes that we're focused on is that the technology is serving a purpose. It's not just for technology's sake. There has been many companies over the last number of years that we've seen that interesting idea, but don't have a great way to attack the market, don't have an integration partner that would help, and don't necessarily have a supply chain which will be accommodating for their customer base. And so I think more companies are focused on those particular aspects. Again, some of the key drivers that we've seen is, of course, COVID-19, labor scarcity and cost. This is especially important in some higher cost areas of the world. We're currently working with some companies in the waste management sector. One of our partners, Jamie Boyd, has a long track record in that sector, and they're having good success in areas where labor is hard to find. In many parts of the world, waste sorting is done manually by humans, and it's starting to make more sense to bring in equipment that can do this using things like robotics or artificial intelligence, machine vision, to accurately sort products. I think there are a number of other things to highlight here. One of the ideas is increased workforces across the country, and that's helping things like distributed workforces and allowing companies to not be in a centralized location, which is really important. I think getting more traction now, where you don't need to have everything all in one place. You're able to take advantage of different geographies where costs might be cheaper, talent that isn't as centralized, so you can operate in, let's say, the Midwest versus somewhere on the West Coast, and get access to this great talent. And of course, with COVID-19, the whole idea of working remote is becoming more common and has broken down some of those societal norms. And if people have questions, feel free to either enter them in the chat function, or feel free to step in if anyone wants to dig in on any specific area that I'm going to talk about. As we were thinking about our observations of what we'd seen in the market over the last several months, we had a number of predictions. And now that we've, over the last, frankly, a month and a half or so since we released this report, I think these are continuing to be true. One is that distributed environment that I talked about. Again, the geographic, areas of the country. We spend a lot of time in particular in the Pittsburgh market, given the robotics ecosystem that's there. And you're seeing technology that originally was more appropriate for larger companies rolling downhill to small and medium-sized businesses. And I think overall, one thing that you can certainly count on that you'll be surprised as you move forward. I think some of the things that we've seen coming out of incubation programs at Carnegie Mellon University, for example, are really exciting. And so we think there's going to be, particularly some interesting things in the pipe. And one thing I will say that I wanted to add on to this, another prediction is we're seeing more and varied type of investors looking to participate in RAAI capital raise situations. So, you raise some money from Alliance of Angels or an angel investor, and then you may do your Series A if you go the venture route. We're now finding that more traditional private equity firms, hedge funds, for example, and corporate VCs or corporate investment arms in particular are taking an even enhanced focus in this area. Now with the rise of some new business models, which previously were not that common, such as robot as a service, you're seeing more traditional software investors cross over, and you're seeing both hedge funds and some private equity firms that previously were not as interested in this area decide to take a broader view. And that's really created some more opportunities from both our clients that we're working with and what we've seen in the market.
Hi, Jason.
Yes.
This is Christian. I have a quick question. There's been, recent pressure in the semiconductor chip supply chain production. Does that have any impact on your near-term predictions at all? And overall, to the robotics and automation industry, what do you think is the effect of this in the near and medium term?
Yeah, it's a good question. It's something that we have seen. We are working with, we have a very large ag practice at Cascadia, and that includes ag tech. And one of the companies that we're working with is seeing that supply chain, those supply chain constraints, and it may moderate, sales growth to some extent as they can't meet the production needs. This could be a field tractor or an autonomous tractor situation, getting those products to market. This could be semiconductor supply chain, as you mentioned. It's a coupled factor. One is production capacity, if there's been disruptions over COVID shutdowns and things of that nature. And secondly, from some of the customer products, demand has been really strong. So what we've seen, for example, in that tractor situation in the US is, people over the last year or farmers over the last year have decided, I can't get all the labor that I needed because of COVID. So I am going to invest in more tractors and automation products, which created an unusual demand in that area, leading to supply shortages. So some of it is because product was front loaded and sold in 2020 that may have been sold in 2021, but there also are some true supply chain disruptions that we have seen. I do think they will have an effect for the balance of the year.
Yeah, thank you.
So this is just demonstrating that, robots are here and accelerating. This shouldn't surprise anybody. And we can expect to see this, continuing to grow going forward. This is the issue on the scarcity of labor. Even though populations have been growing, the number of people in particular areas of the workforce has shrunk. This has been exacerbated by the COVID situation over the last year, just by people being able to work or wanting to work for that matter. But in industrialized nations, Japan, the US, and even in companies that are rapidly growing, or developing, such as some of the other Asian countries, you're seeing these pressures, which is increasing the need for automation, robotics, and artificial intelligence type technologies. Again, some information about how COVID-19 is driving some adoption. It's aware, people, it is a thing that some people are wondering, gee, now that we're seeing increased adoption, how is that going to affect, my role or at a company or in an industry. And I think there will be some changes that we'll see going forward. Now, how they will play out, I think, will somewhat depend on the politics in the given market in the given country, but it's something that I expect to see rapid change over the next several years. One of the areas that I am personally spending more time in is the concept of autonomy and operations in unstructured environments. This is everything from AMRs on a warehouse floor to mobility technology to a last mile delivery robot. And really, when people think of robots in historical manufacturing, what comes to mind? You can think of an auto manufacturing floor where a robot does one thing and one thing well, and sure, that provides some efficiency and automation and labor savings. But what's really exciting now is robots in unstructured environments that can react to stimulus around them. Everything from incorporating simultaneous location and mapping, and we're working with a couple companies that are using that technology right now, to ones that are able to robots that are able to interact with the human environment, for example. That's a barrier to adoption that we expect to see overcome over the next several years. I think some of you may remember recently a company, Bossa Nova, had an issue with Walmart that their particular robots were perceived as not particularly friendly and were scaring customers on the floor. So I think having softer robots that are able to react and interact with humans and in a non-threatening way is going to be a real focus over the next several years here. Again, we've touched on several of the end markets already that I think are important. Agriculture, of course. Things like vertical farming would be a great example of that. And we're working with a couple companies in that area. Energy storage is a huge area. Healthcare and some of the work that my colleague Kevin Cable is doing is a increasingly important area for robots. And of course, supply chain. That's an area that I spend time on along with my colleague Firdaus Pohawala. And you're really seeing robots and AI technologies and all parts of the supply chain and making sure goods and services get from the inputs to their ultimate destination efficiently and quickly. And then of course, transportation with mobility tech. There is a lot of money going into this area. Many of you may have been paying attention to the current special purpose acquisition vehicle or corporation angle, with the number of SPACs in the LiDAR area is particularly interesting. Again, one of the things that I touched on earlier, which I think is important, is the things that hinder end market adoption. You can have this great technology, but if you don't have a way to get into the market, you don't have a way to service it with a client, it's going to be a challenge. I think if you're thinking about your own companies or companies that you're invested in currently, making sure that while there may be great technology, understanding how it will benefit the customer, what the exact total addressable market is, and what are some of the roadblocks that might come as you ramp up production of your products or your services is important. And I think the earlier that you think about those things, the better you'll be. And then I'll also mention one thing, and this isn't necessarily a roadblock, but if you have a company and you're thinking that you want to have a strategic exit at some point, it's important to get that buy-in from a technology basis early. I think if the company is big enough where you're additive from a P&L standpoint, that's helpful, because if you were to get acquired by a strategic acquirer, you could immediately check the financial box and corporate development teams like that. But if you very much plan to sell your business and when it's still in a loss-making situation, the very real considerations of the P&L impact is important. Making sure you have a technology champion within the potential acquirer is important, and that they've used your technology and are familiar with it. We have one client right now that has raised some money and has product in market, has revenue and traction with good reference customers. And the buyers that are most interested, of course, are the ones that are most familiar with the product. They've been spending months, either using the product themselves, incorporating it in their offerings, and getting comfort in how it could leverage their other products. The ones that are coming in fresh just have much steeper learning curve, and likely won't get there to the same level. So definitely encourage you, if you are thinking of eventually selling to a strategic, that you consider opening that dialogue sooner than later. And part of that, frankly, is also the strategic investing arms, whether it's a corporate venture capital office or a strategic investment office of a large company. That's a great way for them to get comfortable with your company, taking that smaller investment in the near term, and then that could potentially turn into an acquisition opportunity down the line. So as we think about the RAAI market, we've bucketed into several areas that we think are interesting. This is very high level. Some of these we are more active than others. So as I mentioned, mobility tech, autonomy with SLAM technologies, robotics, supply chain, energy storage, and general AI are all very much focus areas of us, along with manufacturing automation. And we continue to meet companies in all these areas. And we think they all are important under this umbrella. Again, just kind of a breakdown a little bit more of some of the subsectors and what we're seeing. So I mentioned earlier about structured environments and unstructured environments, where traditional structured environments, you think that robots can be in, increasingly unstructured situations. Again, anything from an AMR moving around the factory floor without having a guide, to agricultural situations, for example, construction, for example, are all creating these great end markets where we're seeing good traction with our RAAI style companies. Here we commented on a few of the established innovators and the emerging leaders that we think are most interesting. This is not comprehensive, of course. It's a representative of what we've seen. Many of these companies we have either have talked to or have relationships with. And this will be kind of an evolving thing. And one thing I do want to highlight is, while this particular piece was our general thoughts on the industry, over the next couple months, we'll be having follow-up pieces, one specifically on supply chain and one specifically on autonomy, that I think will be interesting and a worthwhile read. I mentioned earlier some of the areas that have been important for our RAAI. Silicon Valley, of course, Boston, Pittsburgh with the Carnegie Mellon University there have been leaders in the robotics area. Austin, Texas, Los Angeles, and of course Seattle when it comes to cloud storage and artificial intelligence is increasingly becoming important. But don't overlook some of the Midwestern cities, Columbus, Ohio, for example, as a budding scene, and many others that are increasingly important. And I would also say that identifying, if you're looking to raise capital and you serve or have customers in those markets, reaching out to local investors in those markets is a good way to diversify your investor base versus just simply looking locally or looking in Silicon Valley or areas where you think there might be more traction. Again, you might be surprised what you find. That's certainly from our point of view. We're spending time working with investors and companies that aren't just in the main tech hubs. So just a snapshot of some recent deals over the last year. Clearly lots of activity, moderated to some extent in 2020 with COVID, notwithstanding the SPAC phenomenon, which is still pretty robust. Automation is driving productivity investment in a number of different areas we touched on. We didn't want to do just a recap of all deals that have happened. So we pointed out some that we thought were more interesting to us, either ones that were leading in the sector or ones that we thought were notable and things worth looking at. And of course, the SPAC transactions, some examples here of more recent ones, and then the bets on the LiDAR companies. These in particular, and I think there's been a few since this point as well. It'll be interesting to see who the leaders will be in the end. It doesn't, many of these technologies have differences. And so while many of them seem promising, I couldn't speculate on which ones will be the leader in a couple years' time. One of the things that has been a hindrance for adoption of robots is that they've been capital intensive. Think of them as you are buying equipment and you're deploying it on the factory floor, for example. Large organizations very much are accustomed to making those type of capital expenditure purchases. Smaller organizations, whether it be distributed warehouses and similar places, don't necessarily want to purchase the robots themselves. So there's been the rise of robot as a service, much like software as a service. And we've increasingly seen companies offer this. A few of our clients have this model. Not everyone wants it because it depends what type of customer it is, manufacturing, let's say, versus a more lightweight warehouse are more interested. But what this often does is it does shift some of the risk from the customer, of course, onto the investor. And so it's very important to understand what the unit economics are of the robot that's being used, what its customer lifetime value is. True RAAS would be great, and many customers want that kind of minimum term where they can use it or not, and then see what that the churn rate is. Some for larger installations, such as, let's say, sorting equipment in a industrial setting. It's not practical necessarily to rent it out on a monthly basis given the installation costs. So there may be some type of agreement there, but at the same time, it still is much cheaper for the customer to purchase and bring it on board. And I think you'll see an increasing focus on this type of model as we go forward. And I think some of the capital raised by companies in this sector is going to go to fund this type of operation and enable the particular company to gain market share and frankly access to customers that they would not have otherwise had. I'll stop there for just a second to see if anyone has any other questions that I could address before we move to the end of the presentation.
Hi, Jason. This is Lou McMurrin. Thanks so much for this. I've worked at the intersection of sort of tech and business and government for a while. I'm going to post a report that I worked on called The Future of Work, and you are touching on so much of this. I want to know from a educational institution standpoint, what message can we start sending that educational ship of state that moves very slowly about what skills and education they should be conferring so that people can start to understand where the jobs are and where they should be thinking about their careers and education again, and for faculty and institutions, what they need to be teaching starting like right now, but over the next couple of years. Thank you.
Yeah.
I know it's kind of off where you were, but it's on my mind and I wanted to ask it. So thanks a lot.
Yeah, that's a good question. I think continued focus on engineering and software development and artificial intelligence is important. Data science, I would say, is an important focus area that we're seeing increased activity. One of my colleagues at Cascadia, Michaela Slade, has a data scientist degree. I would encourage anyone, any of my friends who have children who are in school right now, to focus on real world applications and maybe not, frankly, liberal arts education, especially if you're interested in entering this type of field. I think the other area, though, to come at is many of these technologies, are not necessarily designed to replace people. I'll use an example of one of the companies we're working with that does provide some types of sorting equipment. They put together kind of a layman's book on how to understand neural networks and how to understand, how the machines operate. So if you're a supervisor or working in a factory setting or in a MRF or in a food sorting situation, you can understand the technology at a basic level. So I do think there will be still a need for those type of humans in the loop. And I think the more you can have a background in some of these new technologies, whether it's your focus area for your degree, or at least, if you are coming from the finance side, at least having some technical expertise or experience, will serve you well. And I think, if I were advising somebody who's entering college and said, I'm looking to go into finance, for example, or accounting, I would say that's great, but try to get some technical expertise as well. Maybe understand, if you think you want to do investment banking for that matter, or eventual investing, get that technical background, get that understanding, so you'll be better positioned to work in this environment. And certainly, if you are, there's certainly some jobs that may not exist in 10 years' time. I think, many of them, we know what those are, especially from some of the autonomy and mobility tech standpoint. I would be wary of putting all your focus in those areas.
Great, thanks so much. I'm sure I'll follow up with you later.
Sure.
And others, thank you so much.
Does anyone else have a question at this time?
Yeah, hi, Jason. Krishnan here again. Have you done any, collected any data on software automation, where software-based robots are automating common office tasks, such as reading documents and things like that? One company that comes to mind is UiPath. How that is going to, how that is becoming a key aspect of automation. Any thoughts on that?
Yeah, absolutely. So robot process automation in particular, UiPath is a great example. They raised a fairly large round recently with a diverse set of investors, including some hedge funds there. That is an area that's extremely attractive for many of those legacy private equity firms, for example, that look for that profitability, because it has some of those software characteristics. It's asset light, but is within kind of the robot angle. You're seeing that as a great inroad for some of these investors to test their interest in broader RAAI technology. So the robot process automation in particular is a key theme that's come up to us numerous times as we've had conversations with more traditional software or just general middle market private equity firms.
So that is, you're talking from the investment point of view. How is it going to impact things like the future of work? Are we going to see, many white collar jobs just disappear?
Yeah, I think in general, the farther you are away from the customer or the client, the harder a time you'll have in a white collar situation. So at least for the foreseeable future, I think if you are the one holding the relationship with the customer, you're providing a meaningful interaction and value from your insights and perspectives, there will be a need for that. I think if you are a back office person and you are doing a task that can easily be automated, I think your role will switch from either not being there at all to potentially a supervisory role. So where you might have had to have 10 people doing a specific task, you may be able to get away with one who's just overseeing the software, overseeing the processes, and making sure it's correct from, let's say, a compliance or regulatory aspect.
Great, thank you.
Jason, I think I have another question for you if you have time to take it.
Sure, yeah.
So one of the things that you touched a base on earlier was this service model, that robot as a service model that is becoming more and more popular in the industry today. But that model comes with quite a few significant drawbacks, such as the fact that the company that's manufacturing these robots have to take on a significant capital challenge at the beginning, and the payoff period usually takes a few years. So it's a very slow cycle versus selling the hardware upfront. And so my question was more along the lines of, like, have you seen any trends to solve this problem, and how have the investors been responding to this recent trend in service instead of selling the hardware outright?
Right. I think you bring up a couple points there, and this is actually a topic that we are discussing currently with a client of ours. Yeah, the payback period is extremely important. You need to look after, let's say you're selling that robot, you need to make sure you have a gross margin there that makes sense, and you also take into account the time value of money. So even though, if you are thinking this is going to be a longer term payback, you need to factor that in if you're comparing it to a current point of sale. But yes, I think we have seen investor appetite for use of proceeds to go toward building up this type of inventory, or it wouldn't be inventory, PP&E. Most of the RAS models that we've seen, or many we've talked to lately, they are looking at more of a, that'll be a more like an operating lease, where they spend CapEx to purchase the products that they'll maintain ownership with, and then sell them out as a service to their customer base, not as part of inventory like would be done if it were selling the product itself. And that goes to if they're maintaining the title of that robot, and it'll be theirs over time, especially if there's some type of residual value that they can utilize at the end of its useful life, whether from its components or some secondary use down the line. But it is an issue, and I think when investors look at it, they're looking at, is this a customer who would have bought up front and taken the risk of financing the robot, and now since they're being offered this cheap option or cheaper option, they're going to do that, so it's making it less attractive? Or is this model allowing greater penetration of the robot into the market, unlocking customers and creating new opportunities that will create value? And I think the companies that are successful at raising money to fund a RAS style model are able to demonstrate that need. And there is investor appetite for that, provided that the model is sound and you've thought through it, and there is that clear need from a customer base or a customer set that may not have purchased the product up front.
I see. Thank you for that answer. That really helps.
Yep. So let's go through just some of the final slides here, and then we can have a few more minutes for questions at the end. Key qualities that buyers and investors seek: again, defensible technology, product viability, that customer validation is extremely important, the commercialization potential, and of course, the large total addressable market. One thing we did when we did this particular report is had some interviews with companies that we thought were interesting in the sector, and each of our follow-up reports will feature additional interviews. It's great exposure for the companies or the investors that we're talking to, and frankly, we found that many of our readers have thought it was interesting as well. This is particular Robotics Hub, which is a local investor in the Pittsburgh market, working with a lot of Pittsburgh companies. TerraClear is a Northwest-based business that is doing computer vision for rock and soil identification in situations including vineyards and farming. Near Earth Autonomy is working on urban air mobility and urban air transport. And then similar, using computer vision in the energy sector to review pipelines and other infrastructure for issues. So just a quick thing about Cascadia itself. I think most of you are familiar with our firm because of Kevin Cable's connection and our time here in Seattle. We're over 20 years old now, with over 60 investment professionals split between Seattle, Los Angeles, Minneapolis, and New York. 19 managing directors currently out of that 60, with the balance being other coverage officers like vice presidents, senior vice presidents, and support staff. This is our specific RAAI team. We do have an ag tech team that comes in this sector as well, and of course Kevin under the healthcare side, but specifically under RAAI. These are the key team members, and I think a few of them may be on the line, like Michaela. And again, just broad areas where we focus under technology. Many of the related areas, and our colleagues that cover software, cover healthcare products, cover energy, also touch upon RAAI. So it's definitely a firm effort near some of the other people. Some recent deals, we've been very active. I think, as was mentioned at the start with Alliance of Angels, we also have been extremely active and are working with companies to either raise capital, find a strategic sale over the last year. I think we are really bullish on the market right now, especially under RAAI, and have a number of things in the pipeline. And would be happy to have a discussion with anyone on the phone privately afterward to talk about your unique situation, if we can be helpful, or at least build that relationship down the line. And if you are interested in more of our research and our insights, I encourage you to visit our website, cascadiacapital.com, which includes a place you can sign up by email and get access to our reports firsthand in your inbox, or you can see kind of in the recent news and insights what we've published lately. So with that, appreciate everyone's time today, and I'm happy to take a few more questions during the remaining time that we have.
All right, since we have you here, Jason, I'm going to ask one more question. By the way, lots of great data and insights, by the way. Thank you very much. I wanted to ask about the overhang in RAAI due to geopolitical tensions, especially between the US and China. And it seems like we are developing, islands of innovation between the two nations. How do you think this will impact the overall growth of the industry, and whether you see any peaceful resolution towards these matters, and for an overall good progress in this sector?
Yeah, that's a good question. I do think if we continue to see some of the tension, there could be some silos of technology. So a Chinese company, let's say, not sharing its technology with the US and vice versa. There have been some high-profile investors who have got caught up. I think a company that comes to mind would be like DJI in China, that at least as of last year was put on a restricted list, and they have some high-profile investment from firms like Excel, KKR, and others. And so it is an issue. I think there is so much trade that happens between China and the US in particular. It's in everyone's best interest to work together to some extent, but from the case of sensitive technology, I do think there will be barriers, regardless of the current administration versus the last one, that'll be up there. And you might see some of that technology silos where you may have competing technologies in each geography that are used by their respective companies, but are developed and used somewhat independently.
So what would you advise founders who are building solutions in robotics and hardware-based platforms, in terms of them moving forward? How do they hedge their bets in this environment?
Yeah, so I guess if it's a US-based company, I would try to understand and be very clear if any of the technology you're developing could fall under issues as far as some of the restrictions on technology transfers. So we've actually worked with a number of clients that have had this issue, and we've had to get certain sales approved by the government because of this fact. So just understanding so you're not caught off guard. The other thing I would suggest is if you are looking for a potential foreign ownership investment or owner, fully vetting the risks that exist there as well. You don't necessarily want to get in a situation where you've taken money from a group that later turns out to be an issue or some type of restriction in the eyes of the US government, for that matter. So doing your homework early on, making sure you make your decisions with eyes wide open, contact your appropriate counsel as needed, and making sure you make the right decisions.
Jason, do you think the SPAC trend is a fad or something here to stay? Is it based on low rates, or where do you think that's going?
Yeah, that's a good question. Personally, I think it'll be here to stay in some capacity. I think the number of SPACs that have been issued and are on the hunt for good opportunities is a historical high right now. I think to some extent there's a gold rush of sorts of sponsors that are looking to do SPACs to get traction, get one done, and then they can do it again. I think it is potentially an issue, let's say 6 months or a year down the line, that the SPACs who have been fairly successful and have had a track record of doing one or more will be better positioned than newcomers who are trying to get in the market for the first time. But I don't think it's a fad. I think it is a new avenue. It's proven very attractive for companies so far in getting valuations that are much higher than they otherwise could get. But in many of these SPACs, they don't involve liquidity to the current shareholders. They often roll fully into the new public company. And occasionally there are kind of a pipe attached to them, and you do see those. But it's the owners and the management team and the founders of the business really seeing, wow, we can not only have this money to jumpstart our growth, use it for everything from RAS models to further product development, enhancing the sales and marketing, and potentially get a leap up on competition. So it is attractive from the company standpoint, and it's also attractive from the investor standpoint in many cases due to some of the warrants and other enhancements that are put into the opportunity that wouldn't necessarily be available if you were just buying stock in a public company.
Great, thanks very much.
All right, do we have any more questions for Jason? Let me just check. Did anyone leave a question in the chat?
Let me check.
I don't see any there. Okay, just taking a look. All right. So if there are no further questions, I'll really like to thank Jason for spending his time with us, sharing all his insights and knowledge with us about the topic. Really, really appreciate it.
Yeah, thank you so much for the time today. Again, happy to speak directly with anybody on the phone. If you'd like to speak further about both either this sector or with, about what Cascadia does and how we could potentially be helpful. So I appreciate the opportunity here from the Alliance of Angels.
Sounds good. Thank you very much, and have a great rest of the week to all. Thank you.
Thank you.